watching Stockwatch. I'm Zinati Kuma, and joining me to unpack your stock-related questions today are Grant Nader from Benguela Global Fund Managers and Drikus from Capicraft. Be sure to send your questions through via email at stockwatch@bdtv.co.za, via SMS on 41392 or on X at Business Day TV using the hashtag Stockwatch. Thank you so much for your time, gents. I'm not going to ask you about SONA. We will see what happens soon. So there's no point in wasting time trying to really figure out what the president is going to say. Of course, that address coming up in about 30 minutes. So let's get to the questions. Let's actually talk about gold because particularly even with DRD Gold that came out with numbers today, solid. Of course, we know the support that these miners have gotten from gold. It was quite interesting to see the movements because it started off, I think it popped about 3% at some point, and then it did pull back, declining, I think, more than 1% or almost 2%. And I was actually looking at the rest of the miners also trading in the red. Quite interesting considering that gold did hit $2,900 an ounce. The question here is another record on gold price. Where do you see the price going in the short term, and is it too late to buy gold companies like Gold Fields and Harmony? Someone actually earlier picked a gold ETF, and I'm wondering if maybe those are safer than the gold miners. Grant?
Well, I mean, is it too late to buy gold? I feel like the retail momentum, the kind of consciousness around gold is hotting up now. So yeah. I think it's getting to that dangerous part to buy gold, but I still think it actually goes higher. I think the gold miners have lagged the gold price move. Historically, you would have seen a much more outsized return from gold miners with gold trading the way it has over the past year and a half because they've been very poor on their cost control. So I think a lot of the gold shares have been underwhelming, even though they've done quite well. And if gold holds these levels, you can definitely still buy the miners. But it's a big if. I mean, I think it's had a bit of it's starting to look a bit frothy to me in the sort of shorter term. It might go a bit further. I'd be a little cautious. I wouldn't chase the gold here, personally.
Interesting. Also interesting in that the miners have lagged the gold price, so maybe there may still be some opportunity there. And also on the other side of the coin, Drikus, a lot of people have been asking if they should be shorting gold at this time. So there's just a lot of debate if there's still upside left there, or if maybe this is the time that people should be taking profits. Your thoughts?
Well, firstly, most people don't own gold. 71% of financial advisors in the US have basically no gold exposure. There might be some by accident, so the total exposure of their clients is less than 1%. So 71% of financial advisors or their clients don't hold gold within their portfolios. Maybe they hold some gold outside, in coin form, and those you don't just sell because the price is higher. Those you typically hold for the longer term. So I don't think you need to sell those. I do think it's due for a pullback. I think there's a lot of indication that there's just too much momentum in here. It's overbought, maybe in the short term. But 5 to 10 years from now, there's no reason why gold couldn't double, from even these levels, somewhere between 5 and 10,000, 5 to 10 years out. I think that's realistic. Doubling in the next 5 to 10 years should be an easy ask. What drives gold lower over the next few years? Well, for that you would need global austerity. All the big economies in the world needs to start getting their fiscal houses in order while keeping inflation low. So not growing their way out, not inflating their way out, but cutting the fiscus like Europe has done, out of the European crisis since 2011, 2012. Gold had a rough time then, and that will cap gold's price, absolutely. And geopolitical risk. If China and the US sits down and they have an agreement, I think gold sells off $200-300 easily within a few days. I think those are the risks. I don't see them materializing. I would give those risks a fairly smaller percentage chance of happening, probability, and I lean to a higher gold price over the longer term. But yes, if you're looking to get in, I'd wait for a pullback. It's just too hard at the moment.
That's actually quite interesting. I mean, the stats that Drikus has given in terms of that not a lot of people have gold exposure, or maybe it might be by accident. I think earlier on this week or sometime last week, there was a question of how much gold should be in your portfolio. Grant, I mean, should there be a place kept in your portfolio for gold?
I mean, I do think so, and I've always thought so for the most part, because the idea of a diversified portfolio is to have uncorrelated returns, something that can go up maybe when things are going down, something that can buffer the shocks or whatever it may be. And I think gold has proven to be a good store of value over time. It's not the source of massive outsized returns, but it's a really good store of value. And as you get a continuous deflation, I mean, a debt, this escalating debt and fiat currency devaluation, I think gold will serve quite a good little cornerstone in the portfolio. I wouldn't hold more than 5% in terms of a long-term holding, but you could be tactical and add a little bit, take a little bit off if you're feeling the urge to trade a little bit. But a little core portfolio, core holding does provide a nice uncorrelated asset for the most part, so I like it.
Okay. Well, something that the markets did like today is Aspen. And actually, when I looked at SINS, the only announcement that they put out was that they were releasing their results, I think, sometime next month. But I think initially the share was up 4 or 5%. It has reversed some of those gains now, but trading significantly in green territory. There is a question here. Why did Aspen drop so much today? Well, it didn't drop. It was in the green. Drikus, Aspen?
I haven't followed it for quite a while, to be honest. I'm keeping my hands off pharmaceuticals. I think it's going to be a political football, especially with the new administration in the US. There's a lot to answer for over the last few years, and there's a lot of stuff. I'm not sure to believe in everything, obviously, that I read, but there is a lot of smoke, and somewhere there's a fire, and I think pharmaceutical companies are going to get they're going to be the political football in the next few years. So I'm just keeping away from the sector.
Well, actually, I see that this question was yesterday, so it did drop yesterday, and then we had that gain today. Also, is it linked on any level, Grant, to Novo Nordisk and what Eli Lilly have put out?
Possibly, because I mean they've got the contract with Eli Lilly. They're going to be doing some of those manufacturing for them. So that outlook for those GLP-1s, I think it's still pretty strong, but it has been softening. The tone around these companies has softened a little bit. That might have been an offset. But also around this 170 level, there's definitely a flaw in the price. Guys are stepping in to buy it. Remember, it's pulled back from 230 in the middle of last year, I think. And so I think it's finding a level where it looks relatively cheap. Most of SA Inc. has run ahead of it. Guys are looking for a bit of value. I suspect there's a bit of speculative positioning here, and in anticipation of the eventual improvement in earnings and capacity utilization and margin uplift that everyone's been looking for a couple of years now.
All right. Well, gents, let us go to Sun International. Can you ask the panel, can we expect a larger dividend from Sun International as they have not bought Piedmont? I think the last communication that we got was that the Competition Commission recommended that the tribunal not accept this merger because the gambling space would be too concentrated. Are you expecting any, I mean, because also it hasn't really gone to the tribunal, Drikus, they wouldn't really be planning on doing anything with that money yet, right?
Yeah, sure. No, I think the chances for dividend has just gone up, obviously.
Yeah.
So I can't see why not.
Yeah. And actually, because we do know that a lot of the time the tribunal does go on the Competition Commission's recommendations, even though it does not do that all the time. But if it does not go through, Grant, would your view on Sun International and its growth prospects change in any way?
No, I mean, it wouldn't change my view on the growth prospects. I think they're quite nicely positioned. They seem to know where they want to play and where they don't want to play. and I think they've got a reasonably good online franchise and a physical asset portfolio. Tourism, I think, is on the rise. It continues to. I don't think we're back to 2019 levels yet in terms of visitor numbers. So I still think there's a good growth opportunity for them. It's yet to be seen what happens with the US politics, if that influences tourism. Maybe that's an outlying risk. But I think on the whole, this has been a pretty good management team. They've done well through COVID and rebuilding the balance sheet, etc. So it's a solid little business. I like it.
Ah, okay. Well, gents, let us go to Boxer. I bought Boxer last week when it was down 4%. It has done nothing for me but drop, even after this week's results that were better than Pick n Pay. Today, grocery retailers were up, but Boxer, where is this stock selling? What's happening with the stock? Should I just sell it? Drikus?
I think this is just a typical post-IPO hangover. So always a lot of hype around a IPO, especially a bigger one like Boxer. There was a lot of attention on it. It's a growth company. Those are scarce on the JSE. I think, maybe the market overpaid once it's listed, and but it should grow into its valuation over the next year or 2 or 3. I would just hold on to it if I were the investor.
Yeah, I think we even saw that with Zeda, where it didn't do anything after it listed, and then all of a sudden we did see some buying activity there. Do you think that this is just a short-term blip, Grant, and that, as Drikus says, it will grow into its valuation?
Yeah, absolutely. I think if you're looking at it 1 week later, you might be trading, and I think that's different. And if you're trading, you have to look at the charts and the technicals. I don't know whether it's a sell or buy here, but what I will say, as Drikus said, it's a great business. There's a bit of an overhang. A lot of guys want to take some profits, but I can tell you a little bit lower, there's a lot of people who want to own more, who didn't get their allocation in that listing. And so this is a good business. It's got a good growth runway. I think you can hold it long term. I wouldn't buy it here, but I would certainly be looking at entry points. And so I don't think you should worry too much. If it gives you another 10% on the downside, maybe you should double up.
Okay.
So yeah, I think it's a long-term hold if you're investing, for sure.
All right, gents, let's get to the questions. Any preference on AI shares? We've had a few of them. Is it AMD, ASML, and TSMC coming out with numbers, I think, in the last 2 weeks? Grant, do you have any preference there?
Yeah, I mean, I guess it depends where you want to play in the stack, in terms of hardware, software, application layer, all those good things. But I like ASML. I think it wins regardless. They important positioning. Same with TSMC. I don't think it's terribly. I think it's still reasonably well priced. I think they will win in all outcomes. So the DeepSeek noise that's clouding or the picture, I think the outcome from that is you'll see a greater and more rapid proliferation of AI, which means you'll actually have more demand, not less. It might be more widely distributed, but you're ultimately going to need the compute. You're going to need the inference chips. So maybe NVIDIA might not benefit as much. It might be some of the other chip makers. The high bandwidth memory is still going to be there. So I think the broad picture is still in play. In terms of some of the softer entry points, I still think Meta's got a lot of legs, very well positioned. Google, I also think, is well positioned. Salesforce, right at the cutting edge of the agentic AI. So there's a lot of names. I think there's still some good opportunities. Some of them are richly priced, so you have to be very careful. But for a patient investor, there's definitely some good ones out there.
And it's actually quite interesting because, I mean, you have the suppliers of the chips, the chip making machines and the AI technology, and then you've got kind of your the other tech companies as well that are buying these products, these services, that are spending on boosting their AI capabilities. Where would you be leaning towards there, Drikus? Which category?
So there's a few categories. The big one is the AI hyperscalers. Those are the Metas, Googles. Those are the guys that write the LLMs, the large language models, right? They've owned the AI code, if you will. Then you've got the guys that, has the picks and shovels, the guys that supply the chips. those I would say, and I would like to remind everyone that that is a very cyclical industry, and once that wave crests, and it really plunges. So, and it will pick up again. There's no doubt a big technological revolution coming, but still a lot of orders has been front loaded onto revenue already, and into the income statements. Those are already in the income statements, and above that you've got high valuations, etc. So a lot of it has already been discounted in share prices, etc. And then you've got the integrators and the developers. Integrators will be the rest of the economy that's going to benefit from the productivity boost. So if AI really materializes as we suppose it would, then it should be very beneficial for the S&P 490, everything below the max 7 and so. And then you've got the developers. We own a few there. Those are the guys like, let's say, like Adobe, or even Microsoft and DocuSign or Netflix. Everyone that is going to provide AI-backed service. Those are the other ones. The one we prefer is the one that provides the land, the water, and electricity. So we own a little company, a small position in land bridge, then in the West Permian, in the Delaware Basin, and they are planning on building a lot of servers there, data centers there, and that is where those data centers are very water, electricity, and land hungry.
It's really, really interesting because you must know your AI story and really be able to back up why you are investing in a certain company, considering the impact that AI will have on that company. Let's go to beauty. There's a question on Estée Lauder. This one was actually directed to David Shapiro, but I'll check a few gents have that on your radar on any level, because the viewer is thinking of acquiring Estée Lauder, and I know also that also has a link to the Chinese market. Grant?
Yeah, this is a tough one. This has been down over. It's halved over the last year, and I think over 5 years it's also down. So it's a tough one. I think they've been eaten by the cheap competitors. The Ulta Beauty and the Elf have taken a lot of share from these guys. I don't think their online strategy's been as sharp as it needed to be to compete using social media, etc., etc. So I would stay away from it. You know what they say about bottom pickers, but it has a history of being a fairly decent company. Maybe there's value to unlock there, but I haven't seen signs of a turnaround yet. So until I like to see a bit of a turnaround or have some conviction around that before I would buy it.
Okay, Drikus, is this one on your radar at all?
Yeah, no, not really, but I don't touch turnarounds. More than 70% of turnarounds fail, and the companies disappear into obscurity over time. So, or they buckle under balance sheet press, etc. So I don't really like turnarounds. I've had a lot of bad luck myself. More than 70%, if you will, in turnarounds. So I think there's better investment strategies out there.
All right. We just got a question on the charts, why the graphs aren't showing. We've been getting a lot of those, and we have heard your cries. We are just sorting out a few things, but we should have those graphs back maybe in the next week or so. But we have noticed your questions on those, and your requests have not fallen on deaf ears. We will be having those back up very, very soon. There is a question on Old Mutual. Your view on that, Grant, in the insurance space?
I think the best thing Old Mutual's got going for it is that it's cheap. But outside of that, it doesn't excite me. I know they've got the banking initiative. They've got a good foundation, a good platform in terms of number of users and mass foundation. But it's a show me story, and they haven't shown me for 10 years. So I don't like it. And the valuation is the only reason I'd even cast my eye at it. Other than that, I'd like to see an improvement in operating metrics across the board there before it gets exciting.
Yeah, Grant underwhelmed there. Drikus, your take on Old Mutual?
Yeah, it looks cheap. I wanted to say it's like the ABSA, of the insurance industry, but they're really wrong because they've got a strategic partnership with Nedbank, and so that would be wrong. But no, it's cheap, but cheap for a reason. They're bleeding market share to the rest of the industry, and if you just look at a product lineup between Old Mutual and a few of the others, it's a very commoditized business these days. So when it comes to large financial service providers, it's much better for clients to approach guys like me and Grant, right, Grant?
Yes, absolutely.
All right, gents. Before we go to your stock picks, I do want to check in on the Anglo stable. The last time I checked, Anglo American Platinum and Kumba Iron Ore were the most beaten down there. Actually, the parent was actually up, and this trend has actually been going on for a while, where Anglo American will actually have a climb on its share price, but Amplats particularly will be down, and Kumba Iron Ore did join today. Just your view on those differences, Grant?
Remember, there's this unbundling that's going to play out. So Anglo's has dumped 2 lots of 10% of Amplats into the market. So that's created a lot of overhang. And they still have another 50% that's going to come out when there's middle of the year. So, you're going to get stock cheaply along the way, and there's this massive liquidity event that's coming into the market. So I think that's creating this high underperformance and extending the gap on that side. Kumba, I think it's really also operational. They're not able to drive production volumes and sales through the Transnet challenges that they're having. And Anglo's is doing well. Their copper operations are doing well. And their iron ore in South America came out with some of their best numbers they've ever had. So I think Anglo's is doing well, but there's this overhang around Kumba and Amplats that's clouding the picture in those two.
Yeah, this overhang, but also this is not a new story. It's not a new story, and it's also not a new story what's happening in the PGM market. And I'm just wondering, Drikus, why investors just keep on offloading the stock?
No, you're talking about Amplats.
Yes, Amplats, yeah.
Just keep on loading. Yeah, I think it's apart from Sasol, the most hated stocks maybe on the stock exchange, on the JSE. And it's a very cyclical business. One of the things is in 2022, everybody scrambled for a lot of all the OEMs, the motor manufacturers, all scrambled for palladium because they thought that they wouldn't get palladium out of Russia. They've been buying it all along, and so they've got a lot of inventory. We're not sure where that inventory cycle is. It will turn, and the palladium price should turn up. All the while, I think the Russians have been trying to sell as much of their commodities as possible to finance their war machine. So, if you get a stop in the or ceasefire of some kind of peace talks, that with the inventory cycle, you should see the palladium price together with the other PGMs popping quite a bit. And the likes of Amplats they're still generating profit at these levels. I think the best quality one. So obviously it doesn't mean the others are. I think there's a few underwater at these levels like Sibania. I think it's a quality outfit. If you're going to own one sector, buy Amplats and forget about it for 3 years.
All right. Well, something that you're not forgetting about, your stock picks. Let's get to them, gents. We have to go to Sona very soon. Grant, what are you choosing?
I'm going with Clicks. It's one of those that it's never cheap enough, but it's had a decent pullback from its highs. It's going to capture sort of this. It's got the stability of the the core healthcare piece and the pharmacy piece. Plus, you've got the front shop, you've got the beauty. That's going to capture the sort of improving environment I think we're going to see for South Africans. Rate cuts feeding through, and a better macro outlook. So I think you're getting the best of both worlds there. I think they've got a good growth runway, decent capex rollout plans, store rollout plans, etc. Excellent management, excellent execution remains in place. So that's my call, is to buy Clicks.
All right. Drikus, let's get to your stock pick quickly. Cyril is waiting.
SIL, that's the Global Silver Miners ETF. I think silver has lagged gold badly. It looks like it wants to break out from $33 an ounce. If it does, 50 might be on the cards. And then, the silver miners have been underperforming themselves. So I think that one it can pop quite nicely. So it's, that's mine.
All right. Thanks so much for your time and for your analysis today, gents. Enjoy Sona. And we'll speak again very, very soon. That is all for tonight's Stock Watch. Thanks to our guest, Grant Nader from Benguela Global Fund Managers and Drikus from Capicraft. Stock Watch will be pre-recorded at 12:30 tomorrow. Be sure to send your questions through via email to stockwatch@bdtv.co.za, via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. Up next, though, the close. Stay watching.